Well, of course, we all want to know what's going on in the marketplace, and not just today, but in the past, and also get a little bit of an idea of what's happening in the future. So we have three gentlemen here that are going to help to explain what's going on and what we can expect. We, of course, have Simon Giannini. He's going to give us the real estate perspective. We also have Paul Golini, and he's the Executive Vice President of Empire Communities. And we have George Carras, and he's the President of RealNet Canada. So three brilliant gentlemen, and of course, welcome all of you to the show.
Thank you. It's great to be here.
Great having you guys.
So let's do a little recap. I'm going to start with you, George, and let's talk about what we've experienced so far in 2014.
We've had a really good rebound in 2014, first half of the year.
I like when you say that, a good rebound.
It's a good rebound.
Okay.
We've had new home sales on both the high-rise side and the low-rise side up significantly from last year. We're up 45% in new high-rise sales. We're up 58% in low-rise sales. Overall, we're up 50% from last year. It's a very strong rebound.
That is substantial. So, of course, Paul, you can talk from a builder's perspective. You must be experiencing this as well.
We're seeing some great traffic in the sales offices, and we're seeing sales along with that. We haven't had any openings this quarter or this half of the year, but we're definitely seeing what George is talking about.
So, when you
sales.
say, Paul, openings, what do you mean?
Well, launches, really, what we've seen in the past is that the numbers, the new home numbers are often reflective of the number of new home launches and IPOs, as George puts it. Maybe, George, you can sort of clarify.
Yeah, we've often referred to some of the launches of new condominium projects as initial public offerings. They're increasingly sophisticated. They tend to deal with futures for real estate. And those launches have been many, and they've been met with great success.
So what are you foreseeing going on for this last quarter, third quarter and last quarter of this year?
Well, I think one of the things that you look at the supply side to the sales, and we've always said you can't sell what doesn't exist or was not available. It's almost been perfectly balanced. So, like in the high-rise side, we've had just under 11,000 sales in the first half of the year, and on the supply side, we've had almost exactly the same number.
Wow! So
it's almost for one increment of supply, we get one increment of sales, and you've seen the exact same on low rise, 9,500 in sales, 9,185 in new supply. So I think what happens in the last half of the year is going to be really driven on supply.
And I see Simon, of course, nodding, and you love that term, balanced market.
Well, it's balanced and it isn't, because you can have a macro look at the market, but I always talk about the little micro markets, because if you're talking about resale housing in East York versus resale housing in Newmarket, or high rise in the 905s versus high rise downtown, even when downtown East and downtown West, there's differences in supply and certainly differences in demand as well. So you have to analyze every individual little market to get a really good sense of what's going on. But absolutely, we're seeing in the low rise new product. Both supply issues as well as increasing development charges, and both of them driving prices up. But we're seeing no shortage of people willing to show up and write a check.
So, George, let's go back with you and let's talk about 2015.
From a big picture perspective, Simon points out, you're going to see a macro trend of a change in a shift in supply. So fewer amounts of new supply of low-rise homes in the GTA, and I think that's actually changing the perspective a bit now. So it's not just the GTA as the source of low-rise home ground-oriented options. It's now the Greater Golden Horseshoe, or the GGH. So the move-out experience that typically happens is still alive. It's just going to be further out. So 2015, I think, is going to see the continued evolution of that experience, the move out, but you'll probably see a lot more move up to embrace more of the higher density living, because that's part of the plan. The plan is intensification. The market is just simply responding or implementing that plan. So you should see a lot more high density development in 2015.
And George, aren't we also seeing an increasing number of larger square footage 2-bedrooms to address the demand now with empty nesters? Because there was a shift for a long while where we were seeing 2-bedrooms at 650 square feet, and there was a demand for that. But now there's I think it's bouncing back a little bit.
I think there's an interesting observation in that, and the early formations of that trend. I think I'd agree. You are starting to see that, and for very good reasons. I think, you need a broader diversity in the expressions of high density, and 2-bedroom units are going to have a lot more flexibility for larger household formations than a 1-bedroom or a 1+ den.
Paul, I think you can also touch upon that. I mean, we do notice, and we talked about this in the GTA and the downtown core, for a lot of people, that's the first time home buyer option. And they can't simply live in a 650 square foot condo.
Absolutely. We're getting pressure from the consumer side. We have to remember that as developer and builders, we're designing product, and sometimes we lose track of the fact that we're designing for people that are living in these suites and these condos that are all considered homes. And we do get pushback when we're sort of launching a site with extremely small square footages. Obviously, the investors like the small square footages to hit a price point, but we know that in the end, when consumers are either renting or buying these homes, they are looking for the larger square footages.
Certainly for 2015, do you have also great insight, and are you excited about what that year is going to bring?
We are. We are forecasting, as everyone else is, that for interest rates to remain fairly low. So I think that's important to keep in mind. So our window of opportunity there for new home buyers is still existing throughout 2015, and relying on George's numbers at RealNet, we're looking ahead and seeing that there are great opportunities both for our low-rise communities outside the GTA, but also in terms of the scarcity of land issue. We're seeing that there are more opportunities for infill projects within the city, even within the 905, and you're seeing more and more townhome projects. Right. And I think that's also a trend that will continue into 2015.
We talk about the first-time home buyers. It's a huge segment of the population. We talk about when we get to a certain age, of course, it's that downsizing or the downshift effect. But we do have an elderly population, and it's big, and certainly we need options out there. So do we have enough options available, George?
If you're looking at the housing choices in the future, like for families, there's the move up, there's the move out, there's also the move in. And move in is something to consider because the seniors typically have established themselves in the home ownership role within the City of Toronto. And talk about the condition of intensification. Most of them really don't want to leave their home unless they absolutely have to. So that speaks to a few things. It says that for a lot of them, they may not want to move. It also means, from a generational perspective, that their children, who increasingly can't afford mom and dad's home,
are moving in,
and they might be moving in.
I'm going to echo what George said. I spoke to 2 families just last week where the mother is staying in the house, father's passed away. She doesn't need the big house for herself, so the kids with the children with the grandchildren are moving into the house. They're buying the house from the grandmother. Grandmother's staying in the house. So we're seeing that that 3-generation family that was a lot more common, say 40, 50 years ago. We're seeing that. We're also seeing a lot of seniors getting involved in investing, and on a small, not on a huge scale, but buying up duplexes, living in one half and renting out the other half, or renting out their basement.
Smart.
Or tapping into the equity and taking that money out, borrowing on a line of credit and investing in syndicated opportunities. There's a lot of different choice, and there's a lot more in education. And because I think more and more in the last decade, seniors have been impacted because they have the highest net worth. Yeah. They've been more impacted by the craziness of the stock market. They're shifting their money into real estate. They're a lot more confident.
I think we just have to ask the question before we wrap up. So I'm going to start with you, George. Are you optimistic in terms of 2015, or are you nervous?
I think put me in the realist camp, and I'd say the trend for 2015 is going to be increasing the wealth of the single-family home just because of intensification. I think you're going to see a stable high-rise market, and as Paul pointed out, barring any global financial crises, I think Toronto and the Toronto real estate market is a pretty safe place to be.
Very good. Paul Golini, how about your take?
Yeah, I would agree. We're very lucky to be in this market in Toronto and in Canada in general, but we see continued growth in the real estate market, trending towards probably a flattening out of prices in high rise. We continue to see GTA prices on low rise product to move upwards, and we continue to see the trend of people wanting to drive to qualify and move out to some of those communities outside the GTA to find affordability.
Simon, final comment.
Well, we look at the resale market. I think we focused a lot on the new product in the marketplace. We look at the resale. It's just a lot of shuffling going on in the city, and it's pretty simple. There's no supply, and there's an ever-growing population. So we see this, same thing for the next year or 2, 3, unless something dramatic happens.
So we've got the glass half full. Love the optimism. Fantastic job, everybody.
Maybe 3/4.